hits and 2 misses. Anil Sarin, Chief Investment Officer at Centrum PMS, is with us now. Anil, good to have you on the show. So we're talking about, of course, triggers for the market. We've discussed macros, interest rates, and all that for a long time. I think now investors are getting to the micros. It's all about what companies are saying and what they're delivering. Your thoughts on how the season has started off, because the IT biggies have given us a bit of a scare.
So, good morning. Thanks for having me here. Yeah, clearly, I mean, the IT companies are the first to report, and it wasn't a great start. Clearly, one is seeing rotation out of IT. Looks like pharma is, some kind of a low-risk bet now after having been beaten down so much. So yeah, that's not the best thing to have happened, given that we are. It's been a kind of a fledgling recovery. March was full of bad news. If you have a bad start, then it's not the best thing to have happened.
Do you think there is a risk that this weakness that we are seeing in IT names, generally the export market could be under pressure, and therefore there is a risk of earnings downgrades which has not been penciled in by the markets?
You mean to say non-IT? IT, of course.
No, I meant non-IT. I'm saying, the factors which have hurt, the fact that US enterprises are cutting back on costs. People are getting very conscious about their spending. There is a rush to conserve capital, has impacted tech spends. But there is always a possibility that this impacts other spends as well, which has an indirect impact on the Indian demand. Do you think that is a big risk?
I think that risk has been playing out over the last 1 year, ever since the Ukraine war happened. So the developed markets like US and Europe, etc., they were able to handle themselves. But think of motorcycle exporters, think of tire exporters, non-IT exporters. They have been taking it on the chin for quite a few quarters now. In fact, with the DXY, with the dollar, the increase in the value of the dollar vis-a-vis emerging market currencies, that increase moderating, and in fact a little bit of decline happening, I think with a lag, merchandise exports should now start looking up. Along with it, now think of garments, these clothes, etc., that are exported. There was an inventory build-up, and which caused some kind of a blowback onto garment exporters. But I think that phase is now, probably ending, and fresh buying would happen. So IT, in that sense, can be taken to be a lagging indicator caused by, BFSI troubles that America in particular, and to an extent Europe, is facing. So it would be focused on a particular industry in a particular geography. But merchandise exports have been under pressure. Maybe they should be poised for some kind of a recovery as we go into the subsequent quarters.
Okay. So, what's the portfolio bent right now at Centrum, and how are you looking at it? Because it seems that the only go-to place in the market is banking, and that's where the money seems to be moving.
No, you're so right. It is a crowded trade. That's the place where one can unambiguously see all the good things happening, but at the same time, it's also owned. So where do you go? Maybe you go into hospital companies. Maybe you go into beaten down diagnostic companies. So healthcare as a whole, and as I just alluded, that pharma seems to be considered to have bottomed out. But there you would be basically, taking a somewhat of a optimistic look that would look worst is in the price, and from here either it will not go up or it will go up. At least it will not go down. So yeah, banking is crowded. Then there is healthcare. We don't know about QSR. This could be the worst quarter for them. So based on the results, these Jubilants and barbecue nations of the world could be considered, but we will be data dependent on that. Speaking about banks, once again, if the foreign money, where the initial indication that they are coming in with a little bit more of optimism now, if that money FII flow keeps on becoming strong, So there could be some buying in BFSI also. IT, yes, people would be rotating out. I don't know. So it will become more of a bottom-up kind of a situation. So on a broader basis, if you're managing large amounts of money, it's going to be a tough market to negotiate.
So if I have 100 rupees and I want to invest in thematic SIPs, how much would you invest in healthcare, which you believe is, a little attractive and may have bottomed out? How much would you invest in BFSI and any other sectors? Would you give us some sectoral breakup?
Rima, healthcare can be divided into two parts. One is pharmaceuticals, which I think is what you meant. And then there are hospitals, and then there are diagnostics. So all three look attractive. I don't know the weight. I mean, one can look at the sector weight, or one can have a more focused kind of a strategy. BFSI continues to remain attractive. I mean, fine, you may say it is overowned, but it is the one place where there is a lot of visibility. Also, if the interest rates are not going to rise, and maybe there could be a little bit of softening, there again these stocks tend to do well. So that's the other place. Within autos, I think you'll have to be bespoke. You have to be bottom up. Auto ancillaries look better than the auto companies, but yeah, maybe certain motorcycle companies one can sort of look at where the threat from electric vehicles is not yet that strong. So there one can sort of look at it. Like I said, once the bottoming out happens in the case of QSR or in these consumption names, one can look at it. Again, the caveat over here is wait for the results, wait for the commentary, and at that point in time, one can become constructive. Obviously, domestic to be given preference over international. Logistics, one will have to see. I mean, as the consumption names start recovering, logistics companies will also be recovering. Another very big block, which is now coming into focus, we have been constructive on it in the past also. By block, I meant sector, is real estate. So these home manufacturing companies, you can take your pick, but if earnings visibility and strong profitability is to be taken into account, then that is one sector that should command a higher weight in anybody's portfolio than what is the case today.
Got that. Anil, always a great conversation. Thank you very much for joining in and sharing your perspective on the market. We look forward to our next conversation. Well, we'll take a break on that note. With the news, the market's absolutely flat, not much